Sam Kaur, CEO at Reliance Capital, joins us on the show. Sam, hi, morning. First, take us through the performance of the results this quarter and the factors that drove the growth.
Yes, so in the quarter, if you look at, we completed the Nippon Life transaction, so there was a capital gain which we booked in the quarter, as well as the life insurance business showed us a large profit for the last quarter, of which we have been able to consolidate 38% of it, because that's what is owned by Reliance Capital. Besides that, the other businesses have continued to perform in terms of top line growth as well as profitability. The life asset management business, the commercial finance business, and our broking and distribution has shown a significant increase in profits in the last quarter. This is offset partly by the general insurance reserving requirement on the motor third party side. So that is in a nutshell what happened in the quarter. But for the whole year, if you look at profits, have the top line has gone up by about 20% to over 6,500 crores. The profits also gone up by over 50% to over 450 crores. And we've been able to bring our net debt down to about 1.56 times net worth compared to about 2.14. So that's been a big achievement for the company, primarily, of course, with this Nippon Life deal. And our net worth has gone up to over 11,000 crores. So that has helped significantly to boost up the net worth to make us one of the largest financial services players in the market. If you look at business by business, I think our asset management business, though AUMs have come down, the company showed, in terms of in the mutual funds space, the company was number one in terms of the mutual fund industry in terms of profitability. Overall profit has gone up by about 5% to over 300 crores. And on the life insurance side, our profits are at 373 crores. First, it's a maiden profit for the company, though again our new business premium has come down, because primarily due to the change in mix of business.
Morning, Sam. Nikunj also joining in. Can you give us the breakup of the amount of exceptional gains Reliance Capital recorded for the quarter gone by?
Yes, so on the Nippon Life, over 500 crores of profit was booked for the Nippon Life transaction. And for the general insurance side, if you look at it, roughly in the quarter we booked over 240 crores or so of reserve requirement.
Sam, how has the commercial financial business performed in terms of asset book growth, margins, asset quality, and what are the ROEs in the commercial finance space as well?
So if you look at a commercial finance business, we closed the book at about 15,000 crores. So growth has been about over 15 to 20% for the year. In terms of profit, it's remained slight. Compared to last year, we had about 5% reduction in profit, primarily due to the large interest rate increase in the financial year, about 3%, 300 basis points increase. That obviously going forward we will not have, because anyway the interest rates have come down and we expect it not to go up again. So this year the profits should be significantly higher. If you look at the NIMs last year, they've come down to about 4.1%. However, going forward we expect the NIMs to be well over 5% for the company. So if you look at the good thing about the business is fully secured now. The entire book is 100% secured, and our focus is on about 4 or 5 key segments only, which is our SME type business, housing obviously finance business, and commercial vehicle construction equipment, and finally on infra projects.
Sam, so how do you see life insurance premiums panning out for the industry and then for Reliance Capital for first this quarter and then for the entire year, which is FY13?
So if you look at the life insurance business, the business has shrunk quite a bit in terms of new business premium, primarily because unit-linked products were no longer a flavor of the month if you look at it for the industry as well. A number of companies are focusing on group business, single premium business. We focused on traditional business. Nearly 70% of our business comes from traditional products, about 10% from nearly 10 to 15% from single premium, and the balance from group business. This is a significant switch for us because primarily we were a unit-linked player. On the traditional products also, it's primarily participating products, and if you look at a traditional product, the average premium size is about 50% of a unit-linked product. So therefore, obviously new business premium also falls accordingly. Good thing about us is that we've been able to sell the largest number of policies in the private sector for the last financial year. Nearly 1.1 million policies were sold. And going forward, our focus will be to increase our traditional product base. So therefore, we sell more and more traditional products and grow the business by about 15 to 20%, and bring in a bank if we can as a partner.
So are you bringing in a partner in general insurance business as well via the stake sale route?
So on that one, yes, we are looking at bringing in a partner in the general insurance front also, just like we've done on the life and the asset management in the process of doing. And this process we expect we'll be able to complete in this financial year. So we are in preliminary stages, so as and when the opportunity comes, we'll talk about that.
Sam, on life insurance, what is your overall business outlook and how do you see growth and profitability panning out for Reliance Capital for this financial year?
In terms of, I think the profitability wise, I've mentioned that the profits were over 370 crores this year, and we expect it to increase going forward. So we want to bring it to about ROE of about 15 to 16% going forward. In terms of growth, as I said, about the industry should grow, I think 10 to 12%. We should try at least achieve that minimum growth rate.
And what are the capital requirements for Reliance Capital in the life insurance business over the next 2 years?
There's no capital requirements because we put in 300 crores during the Nippon Life deal, so we are about 450% solvent. So therefore, going forward, we don't expect any capital requirements. However, on the general insurance side, we may put in about 100 crores, which we have as funds in the company.
Finally, the proceeds from Nippon Life were supposed to be used to reduce debt. So after the Nippon deal, at a company level, what are your current debt levels?
The debt level of the company is roughly about 5,000 crores, of which again we will be able to reduce. This is excluding the commercial finance book, which is about 15,000 crores rather. And this 5,000 crores also will reduce by about another 1,450 crores or so with the asset management deal. So that will bring us down to about 3,000.